Hi, this is Paul Drockton again with moneyteachers.org. Um, basically, what I'd like to talk about is some of the risks that we face as we go through life, as we raise our families, um, and how we can prepare ourselves to literally either avoid the risk totally or to meet it head on without it ruining our lives. The first risk, of course, that all of us are aware of is the risk of dying. Um, 1 out of 5 of us will die before age 65. That's 20%. Uh, now, the reality is that the death of a provider, or the main provider, is the leading cause of poverty in the United States. And if you think about it, it makes a lot of sense that we need to do everything we can to protect our income. And really, when you look at life insurance, the purpose of life insurance isn't just to bury us, put us in a coffin. The purpose is to make sure that after we're gone, our family can continue to accomplish the same goals that they would accomplish if we were there to help them. And that is the purpose of life insurance. And so the key is not to focus so much on trying to make money within a life insurance policy. As a matter of fact, one of the things that you'll learn about me is that I never recommend a whole life policy to my clients unless they literally have cash that they don't know what to do with. For most individuals, the cheapest and the best way for you to buy life insurance is to buy term life insurance. And what I mean by that is that term doesn't come with any cash value. And because it doesn't have cash values, it's cheaper. Now, when you think about it, life insurance is only one of the risks that we're going to face. The second risk that we really need to meet head on is the risk of disability. And believe it or not, there's a higher likelihood of you becoming disabled than there is of you dying. 45% of us will become disabled during some point in our lifetime. And the average disability can last anywhere from 18 months to 2.5 years. So imagine yourself having to try to provide for your family without any income at all. And obviously there are ways that you can meet this head on, and one of them is disability insurance, which I talk about quite a bit in my slideshows on the website, moneyteachers.org. So if you're interested in learning how to buy disability insurance, I recommend that you go through that slideshow. The purpose of the video is just awareness. Obviously, we're on YouTube, and they won't let me talk much longer than 10 minutes. So, in essence, it's www.moneyteachers.org. Now let's talk about the third risk, and that's the risk of ending up needing some form of long-term care. Now, long-term care simply means that you need to be either in a hospital setting or you need to have some type of health care provider come and visit you in your home. And obviously, long-term care can go hand in hand with a disability. Some examples of individuals who've had to deal with long-term care: individuals in serious car accidents, individuals with critical illnesses like cancer, individuals who simply, because of age, have to deal with diabetes or other issues like from the heart or stroke. The reality is that if you find yourself in a situation where you need it, it's going to end up, in most cases, costing you about $60,000 per year out of pocket. Now, some people think that the government just automatically pays for long-term care, or that your employer does. The reality is that the government provides Medicaid, which is a form of long-term care, but in order for you to qualify, you literally have to have no assets. And the IRS, the Internal Revenue Service, will make sure that you haven't given your assets away during what they call the look-back period. And this look-back period can be anywhere from 3 to 5 years, depending on what state you live in. And so I might be diagnosed today with something that places me in a nursing home, and because of that, I can actually, I will be forced by the Internal Revenue Service to liquidate any of my assets before the government will pay any Medicaid. And there's a good reason for that. If you take a look at your state's budget and my state's budget, almost 40, sometimes 50% of the state budget goes towards paying the cost of nursing home care, the cost of long-term care. And so the government obviously expects us to, if we have assets, to liquidate those. And I have literally seen individuals who have lost everything because they never planned for this. Now, once you turn age 65, the probability of you ending up either in a nursing home or needing some type of long-term care is 50%. That's 1 out of 2. And the average stay in a nursing home could be anywhere, again, from 18 months to over 2 years. So, unless you have an extra $120,000 lying around, I recommend that you look into that. And again, I explain everything you need to know about long-term care in my slide presentations, which are available at moneyteachers.org. Now, there's another risk I'd like to talk to you about, and that is the risk of being underinsured with your health insurance. A lot of individuals don't realize that their policy has a cap on it. Personally, I'm not concerned about having to go see a doctor and pay a $50 deductible. You shouldn't be either. Bills can be paid. Small bills can be paid over time. And most doctors and dentists are more than happy to work with us. What should be a greater concern is making sure that your health insurance isn't capped with a $1 million benefit. And what I mean by that is most policies have a cap to it, whether it's 1 million, 2 million, 3 million, 5 million. 1 million is obviously enough probably to get you through one major surgery, and if you're lucky, a month in the hospital with some additional procedures. It doesn't last that long, especially if you've got a critical illness like cancer or something else. And again, understand that medical bills are something that can pile up quickly and literally can lead to bankruptcy if they're not dealt with. And the easiest way to deal with them is just to make sure you're properly insured. And again, I explain quite a bit more about health insurance on my website, moneyteachers.org. And so these are some of the risks that you can protect against. There's some that you can't, but these are risks that you can protect against. We'll talk a little bit more about some other risks that we all face and how to deal with them, and some of our other videos. And I'll get more specific in areas like auto insurance, home insurance, emergency family preparedness. We all saw what happened in New Orleans after Katrina, and how some of the things that many of us take for granted just disappeared in literally one night. And it was terrible. And really none of us should want to go through that.